Hey everybody, welcome back. This is not financial advice. It's for educational purposes only, and it's what I'm doing in my own portfolio and how I'm thinking about the market. So today I'm going to do something a little bit differently. I'm going to try to speak as quickly as possible to get through a market recap instead of going through positions in my multiple portfolios like I did yesterday. If you'd like to see anything in particular, please leave a comment below. And of course, please subscribe. So today, the story is pretty clear. It's not a clean continuation of yesterday's software rally. The indexes are holding up. SPY is up 0.14%. QQQ, I think, was 0.46. The Dow was up a little bit more. It outperformed at 0.51. IWM outperformed that at 0.93. And I'm not going to do sector analysis quite yet, but XLE outperformed all of them at 1.15, which actually is something I watch closely, XLE versus SPY, just to see who's outperforming, because it informs me as to, risk on inequities. But seeing the Dow also participate, I feel a little bit less worried about that reading, except that the XLE has outperformed 2 days in a row. So yeah, SPY's up, basically flat. Green, QQQ is green, but it is mixed underneath. AI infrastructure is working while some of yesterday's big software and mega cap winners are giving back gains. Oops, I didn't go to QQQ on that. And like I said, the Dow is stronger, so it's participating. And IWM isn't just a broad index level rally. It's basically selective small cap participation rather than broad animal spirits. And we can go through some of those individual names. But today, one of the more important things was the JOLTS number. And if you notice, let me go even to the hourly here. I don't have extended hours trading on when I'm doing these reviews, mainly because I do volatility adjusted assessments going forward, like expected moves to tomorrow, pivot points, that kind of things, some institutional indicators to see what is likely for institutional traders to be carrying out tomorrow. And that is best done on the daily or even intraday timeframes, but no extended hours, so only normal trading hours. But JOLTS, and that's why I brought it up, is because JOLTS actually happened today during regular market hours, and that doesn't always happen with economic data, so I just brought it up. But now thinking about it, JOLTS did happen during normal trading hours, and you may notice mine says 7 a.m., but that's because I am on the West Coast, so yours may have looked a little bit different, depending on where you are. So the JOLTS job openings jumped up to about job openings jumped to 7.6 million, which shows that the labor demand is still resilient, but the hiring cooled. If you read the actual reports, I think that number may show here somewhere too. No, I don't think so. This is just trading economics, but you can get these numbers in a variety of different websites. But anyway, hiring cooled, even though job openings jumped. So it's not a simple hot labor market report. It's more of a mixed signal: strong openings, softer actual hiring, and not enough labor weakness to make the rate cut story easy, which is important because we're watching this not just for the health of the economy, which is very important, but of course we're also watching this. What are the implications for equities and bonds? And the market didn't crash because rates basically they held steady. The market didn't panic. Bonds didn't fall apart. TLT is actually slightly higher. It was up 0.2%. We had a little gap, but part of it, I believe, also not. We already talked about the fact that I don't have my equity showing extended trading sessions, but I think we had a pop or a slow grind up overnight. This is well before the JOLTS. And so just interesting to watch. I'm going to turn this back off here. Sorry for you guys if you're just listening. All I'm doing is turning off after hours on equities. So yeah, TLT is actually slightly higher. So rates are not screaming higher off the report. And so the combined read is this for me with TLT and the JOLTS print is that the market is holding up and rates are contained and investors are rotating instead of selling everything. And so yesterday was software euphoria, and today is AI infrastructure, semis, energy, utilities, and selective small caps. In fact, if we go to Market Watch, you can kind of see that's what's going on here. Software, some of the big software is down here. Although I always hate on the Market Watch, the grouping and information technology of our software stocks, even though that they are part of that, but that doesn't always reflect well for me. I like to look at some other sector ETFs to do it. So semis were up. So if we look at stocks, these are some big moves. Whereas if we look at some of the names that were up yesterday, like Now and even more so Microsoft, for example, Microsoft gave it all back. Whereas Now, for example, it did what I would consider a gap fill reversal. It filled in that gap and started to reverse and trend back up there. But back to the macroeconomic data and some of the data that's dropping tomorrow. Tomorrow we get ADP. where are we here? And ISM Services, factory orders, and the Fed Beige Book. So I'm watching those closely, of course. And then Thursday we get jobless claims. Let's go down there. Where are we? There are jobless claims. There's also some Fed speak here and there and some mortgage rates, but mainly that's what we're watching. And then Friday's the big one. It's the May jobs reports. So that's a huge one happening before the market opens. So make sure that you're positioning accordingly. I like to make sure that I am positioned accordingly, of course, account for it, make sure I'm not too risk on going into those times. That's how I usually do it. And I always have hedges going. We talked about those yesterday, but back to the market recap. So macroeconomic wise, because this is, the data I'm watching, the economic releases, but more on the macro and political end of things, still watching the US Iran headlines, oil, China, tariff headlines, anything basically that's going to change the inflation or growth rate, because I think that's what's driving the market at the moment. So this week is basically a test of whether the market cap can keep buying AI infrastructure while labor data either supports it or challenges that rate cut narrative. And we'll have to see what the numbers are. And then once we see what the numbers are, we're going to see how the market reacts to it. And those two pieces of information will tell us how to assess the read, because it tells us how people with a lot of money, institutions are positioning given that. And we're not just going to look at the immediate reaction. We're going to look at some positioning data. So moving on, the biggest data and markets, not biggest data, the biggest market story today was AI infrastructure, and particularly MRVL. This was up 32% on a large company, a large move like this. And so it's a monster move, up about 30%. And the catalyst was Jensen Huang calling Marvel a potential next $1 trillion company. And that was a huge narrative spark. As if you've been watching what's going on over there, reading about it, a lot of stocks are catching a bid after he mentions them. So it's not just a random stock call out, though. The market is starting to understand that the AI trade is not only about GPUs. It's also networking, custom silicon, optical connectivity, data movement, storage, power, and all the infrastructure that lets these AI systems actually scale. And when you hear, Jensen talk about that, you come to understand it is going to play out economically in so much as NVIDIA is involved in it. So that's why a lot of these trades are getting these moves. And then HPE, a viewer asked about that as well. A huge aftermarket move, about 18% after they recorded Q2 results, a record Q2 results, and a major guidance that raised a guidance raise, I'm trying to talk very quickly. Major guidance raise tied to AI server and infrastructure demand. So it's more of that same story, and it gave that sector a lift. But again, this has to do a lot about what's going on over with NVIDIA and Jensen speaking. So SMH, as you would expect, is up. It's up 4% here. I think SOX, just because of the constituents and how it's made up, was higher than that. And a lot of people nowadays are trading SOX L. It's getting heady, but this was a huge move, obviously, because it's leveraged. But here is the interesting contrast. NVIDIA itself, let me see, how did it actually, it closed slightly lower. Interestingly, I had some plays. We can go into that later, but this is a market recap that I closed midway through the day because this happened slowly. We had a gap up and then this kind of sold off there, probably just hitting resistance, if you will. But we're not going to do a technical analysis of all of these right now, just what happened. If you'd like to see it, let me know. But NVIDIA being slightly lower tells me that the AI trade is broadening. The market isn't just buying NVIDIA every single day when something in, the AI trade is happening or in semis. They're looking broader. And so that's looking for the next layers of the AI supply chain. We've been talking about that a lot on this channel. I think it goes beyond semis and infrastructure, although you could consider some of the things I think it is infrastructure anyway, but not the traditional infrastructure you're thinking, like just the pure play data centers or the networking suppliers. So the read is really that NVIDIA is still the king, no doubt. This is kind of a pretty big move anyway. If you guys were in this when it started to touch the 1 hour 200 SMA, So still a big move for sure, but new money is chasing infrastructure beneficiaries like Marvel, HPE, and other things in the SMH basket. I've had people talking about going long SMH, short NVIDIA, or the opposite, long NVIDIA, short SMH. Totally valid pairs trade if you have a thesis involved with it. But that's kind of what's going on there. And the other big trade I wanted to look at, or at least thematic situation here, was software. Software gave back a lot. So now is down 6%. I've been watching ASAN as a small investment for myself personally. They gave back a lot, but then they started to recover. This was one of those gap fill reversals, although this didn't actually gap fill. So this is almost a continuation there. So I do like this one better. But if we look at IGV, it definitely, it took a hit today. It was down close to 3%, 2.76. But this had another one of those, didn't even close the gap situation. So I like how this is playing out. I think software is going to continue to be a good play, but it's not going to just go straight up parabolic in my assessment of it. So yeah, that's the general software situation. I don't want to go through all of the plays, even though Sentinel-1 was down, which I really was enjoying playing. Path was down, but it's starting to recover. I really enjoyed that as well. I did say Sentinel-1, Zscaler, Monday.com. Yeah, they were pretty much what you would think. Microsoft, though, getting hit the hardest. So on that, let's go to the mega cap. So mega cap tech is mixed. So Microsoft is down hard today, giving back a lot of yesterday's AI, PC, and Microsoft NVIDIA enthusiasm, which makes sense to me. Yesterday Microsoft had a massive move for a company that size, and today the market's saying, okay, the AI PC story is interesting, but we've already priced in a lot of that yesterday. So we're giving some of that back. Also, from a technical standpoint, this lineup here, this is my 200 daily SMA, which the way that I have it set, and again, I'll go through a Thinkorswim tutorial sometime soon, I promise, is set that I can see this no matter what time frame I'm on, because it's so important to me. And yesterday we gapped up above it, which I love to see, but we couldn't quite hold it. So I think we might surf this for a little bit until we have some other catalysts. But yeah, that's what's going on with Microsoft. So Google was another big weak one. That dropped like a rock overnight, and it even hit some of the futures, the equities, the NASDAQ futures, which I'm participating in overnight often. But basically, the issue appears to be concerned around them trying to raise a huge amount of capital for AI infrastructure. So it's like important because it gets to the central question for all of mega cap AI, and it's probably why it was all down today, which is AI capex. Is AI capex creating enough return, or is it becoming a margin pressure story? And so that's the same debate that's hitting Meta, which I'll get to in a second. And Amazon was also lower too. So discretionary mega cap internet are not really helping today. It's not a clean buy every mega cap stock market. And Meta, though, that was also, yesterday, so I couldn't find any specific news yesterday, but I ended up doing a lot more research on it and got to it. So yesterday had that big drop. And let me see if I have it written down here, because it was like a cluster of news that we couldn't get to the bottom ones, which was also a lot about insider selling. So adding to the negative sentiment, recent insider selling activity has been observed. Both Meta's chief legal officer and chief operating officer executed share sales today. And this is an article from yesterday that I hadn't seen. And so it's interesting, it's a cluster of company-specific overhangs hitting at the same time, because there's other things in this article. I don't really go to tradingkey.com. This is, but I had to do some deep research on it, and I could see why this isn't really, the kind of thing that shows up in a lot of news reporting. But it does look like overhead supply, essentially, is what we were hitting, people getting out. So it doesn't necessarily change the thesis for me, and I actually have added to my position. But again, this is not financial advice, because we're holding this support here really well. This is a previous breakout level, and yeah, it's holding it very well. It's hitting it like a brick wall, which also means it may fall through. But we'll do an assessment of Meta if you guys want to see a separate video on that. I just wanted to cover that today because yesterday was a huge move. Today continued, but I found out the reason why. So if Meta can stabilize around this area and reclaim strength, maybe yesterday was a flush. But if it starts losing support while Marvel, HPE, and SMH keep working, it tells me that the market's kind of rotating away from AI ad platform spending stories towards the AI infrastructure winning. But I think that play could also be getting extended, as we've seen in the stocks. So, if I was to rotate, I would be looking for something like this, something I have true conviction in. So then let's go to that's all I wanted to cover for the mega caps today. And I'm sure this story will change because I'm seeing some stuff happening in the after hours. Just on my extra monitor. We've had a little pump over here. So who knows? I'll have to do that, but I didn't prepare that at the time of this recording. So let's get to the space trade. So some viewers said that they were able to trade this yesterday, make quite a bit. I was saying stay cautious. My mandate was not to get in until we hit $5, and we've done that. So this is now starting to look like a potential place for me to do some cash secured puts. But this is a pretty beefy rejection. So what I want to see is it hold the $3.81 because when you lose the 78.6% retracement on the fibs, that's often too much of the move to give back to have proved that the move was real. Now, it may have wiped out a lot of the short interest, but if you look at some names that have done this in the past, it's not always a quick return to those levels. And I'm not particularly long bullish on this anyway. It was more of an income play for me. So, SPCE is getting crushed today. I mean, this is almost 40% down, 38.9. So it's quite significant. And it's what I was saying yesterday. This is a tactical high IV trade. So the best way to express that to me is to sell put options, particularly, and you can see that the crush happened already now with that drop too in IV, probably because we're getting closer to these more normal levels for the stock. But today's sell-off is not just a generic squeeze reversal. There's also a real catalyst, dilution concerns. So Virgin Galactic announced the plan to redeem high interest notes by issuing new shares. So yesterday, the market loved the squeeze and the space hype, but today the market is saying, wait, this company still has capital structure risk. And so with that being the case, I'm not just FOMOing into this. It's kind of a big distinction about how these things work. But the rest of the space basket is telling a somewhat different story. Yesterday it was down, but today some names like ASTS was up. It's having a very strong day. It was about 11.8%. That matters because ASTS was hit hard recently after the Blue Origin launchpad issue, and today's rebound suggests buyers are still defending the satellite to phone platform story. So I still see this as one of the higher upside potentials, but it is a high execution risk name in the space basket. And you can go back to my space video to see how I was thinking about some of these. Voyager, similarly, it was up today 5%, so pretty good. And I think it's important because Voyager is not the same retail squeeze trade as SPCE. Voyager is more of a defense and government and space infrastructure angle. So when Voyager is green and SPCE is getting destroyed, that tells me investors are separating actual space infrastructure exposure from pure retail momentum. So it makes me have a bit more conviction. People are punished. The stocks that are not performing fundamentally are getting punished. And the ones that are performing at the moment or just have better sentiment, basically there seems to be some discretion here. So I like to see that. And Rocket Lab is only slightly green, but that had such a run. And I think there was a lack of structure going on here anyway. I'd be more interested if we come back to $100 to maybe reestablish a position. And what else? So NASA, just to look at an ETF, you could also look at UFO. They're behaving in a similar fashion here. It's up a little over 2%. Actually, no, it came back down towards the end of the day. It's at 1.7%. So it's exactly why I liked using this basket here. It's giving me exposure to the broader space theme without completely being hostage to one squeeze stock. So the message isn't space is dead. The message is that the market is getting more selective, particularly going into the SpaceX IPO. So next, let's go into crypto. So this was quite a dump. This is IBIT. It's the best proxy to look at Bitcoin as through an ETF lens in the markets, in my opinion. Not everybody agrees. BTC maybe. Slightly different, same story. But IBIT was down 6.3%. That was rough. So depending on what you're looking at, 6 or 7%. Hood was also down, but that's because it's getting swept up a little bit in that, even though I have a different theory about Hood being part of the broker-dealer that's going to benefit from the PDT rule changing. So, Hood is down after a huge run, but it's okay. It has overlapping multiple exposures. So it's fintech beta, retail trading beta, crypto sensitivity in the recent Trump accounts, and PDT GDT rule catalyst. So this is something I didn't mind seeing down. If we can get down a little bit more, I'll be interested in playing it if we reapproach the bottom of the super trend that just switched to a buy, or if we come down into my trend line over here. So the question is whether this is normal digestion move. This is back to Bitcoin, and we can also, look at IBIT, but also ETH, which fell. Ethereum fell a lot less in a nominal value. I'd have to compare actually the spot value of actual Bitcoin and Ethereum to see if that's true. But as they're expressed here, people holding the ETF ETH were hurting a lot less than IBIT or even BitX if you're levered up. But right now, I'm not entirely sure if this is the start of something or kind of the end of something, meaning the real question is this normal digestion after a massive move? I had a pretty big trend higher for a few months there, and everybody was saying this is just a bear flag forming, and it could have been indeed. It could also be consolidation here. And maybe this is the liquidity grab towards the lower end of the consolidation / accumulation. So we'll see if that happens. There's a lot of long-term catalysts for crypto, which could have been seen as right now we're seeing a sell the news when all of this legislation and positive news and all of the global financial infrastructure that's being built, which is what I'm watching very closely. I don't want this to be a Bitcoin or crypto review, but things like Amsterdam or, real world asset tokenization is making it a very interesting sector right now. However, if you were just holding this blindly, you'd be down pretty big right now. So Bitcoin having a rough day. Now let's go to some other portfolio names that I talked about yesterday. Not to go through my whole portfolio, but how they mattered for the market. So Rigetti was doing great today. It was up 4.8%, and it's starting to look like it wants to break out of this this consolidation zone, which might be a reaccumulation zone, or at least that's how I'm thinking of it, meaning we accumulated down here, started to break up, we're accumulating again for the next leg higher. But again, this is not financial advice, but I am in this significantly, but for like a 5-year, 10-year thesis. And the same for all of the other names in quantum. So INFQ, it may be a look above and fail, but it may not, but it had a very strong day at a 12% to the upside. So it's looking really good. So let's get in to a few others. So KWeb, a lot of people have been asking about that. Had a great day today with a huge gap up, 3.5%. And that is great on KWeb, especially because we're breaking above this moving average. And I'm always looking for the reclaim of a stack of moving averages. We popped above the 30-minute 200 SMA, but we're being challenged by the hourly. And I think we're starting to pop above some other ones on the 4-hour, not the 200, but the 50 and the 20. But either way, what I really like about this on the daily is this island reversal, which to me always looks like a true liquidity grab or a spring. And what it actually looks like is a spring on the weekly sometimes. But it's to be determined, because on the weekly, it could still definitely be a beginning of a larger downtrend. But that's not my opinion on what's going on with KWeb. I am in this one for a long time, or I've been building a position for a long time. I've been in and out of it for many years. So today it just had a great pump, and the key risks are still policy, U.S.-China trade headlines, and whether it's just another failed China bounce or a real shift in sentiment. So it remains to be seen, but I'm watching it closely. And if you guys want, I'll do a full technical breakdown on it. Also about options flows and other types of flows into it. So let's look at TLT also, because we were talking about that. And TLT has a very similar profile here if you look to KWeb. Worth noting, but they are probably both trading on rates a bit and not just political. So TLT is slightly higher, which actually it's actually really important after a strong JOLTS number. If jobs opening came in hot and TLT was getting crushed, I'd worry that rates were becoming a problem again. But with TLT holding and the bond market is not panicking, that helps keep the broader equity tape constructive, in my opinion. So next, let's look at some sector snapshots here. So we got SMH. We already talked about it. I mean, it is blasting, and semis are strong because AI infrastructure trade is still alive. And today is less about software application names, more about chip names, networking, servers, and physical infrastructure behind AI. XLK also also up. It's positive, but the leadership inside of it is uneven. We already talked about that a bit. MRVL and AI infrastructure are doing the heavy lifting, while Microsoft and some of yesterday's software winners are giving back gains. XLE is strong, which tells me energy is catching a bid again, which is always something to be a little cautious of. But this might just be, again, just some range-bound trading here, a pullback in time, if you will. And that matters because geopolitical risk and oil are still part of the market backdrop. So if Iran headlines move oil, energy can stay relevant very quickly. XLU was actually strong. I mean, it's not a great situation down here based on what happened yesterday, but I think it's worth watching. Utilities are increasingly tied to AI power demand theme. So strength in XLU does not necessarily mean the market is hiding in defensives, but it might also be a power infrastructure trade. So I'd be careful with this. I would be watching it. I'm going to be watching it in correspondence with XLE and SMH to see what I can gather from the three of those moving together. So I'll probably do some type of regression using the three of them and see how we can isolate some alpha from those. Oh, also, let me know if you want to see any of those types of videos, because that's where I get my real trading edge from doing multi-asset regression as well as individual stock technical analysis and flow analysis. So moving on, XLF. It held up today. It wasn't particularly strong. It's almost flat. I did cut some names because they were up. SoFi was up earlier in the day from where I had the position. But I still have a lot of long-term shares. But, it's slightly green, which is supportive, but not really a major leadership signal. Financials are participating, but it's still not a bank-led tape. And on the weaker side, IGV, as we talked about, although it is holding up quite well here. So it's a very interesting one. I'm not FOMOing into this, but it's still supportive and constructive. So it did, and we had a monster move yesterday. So this is holding up nicely after that. Didn't give it all back, unlike some specific names. XLV, that wasn't looking so great. It was weak. Healthcare is not where the money is flowing. And XLY, consumer discretionary, it was also weak, which tells me that it's not confirming the risk on story the same way the semis and AI infrastructure are. So today's market is not just stocks up, it's kind of a rotation day, and I've already described that. And so what to watch this week as we're getting to the end of this little assessment of the markets today. And sorry it was so long. Please, again, let me know if there's anything that I didn't cover you'd like me to cover. I can maybe even make it short this evening. And tomorrow I'm going to drop a long form video, even though this is quite long, but I'm trying to keep them quick. But there's a lot going on in the market these days, guys. So my main takeaway today is pretty simple. Yesterday was, or actually before my main takeaway, let's talk about what to watch this week. I covered a bunch of them, but it's basically the macroeconomics, ADP, ISM, Fed Beige Book, that's tomorrow. And then the key for ISM is because services are a huge part of the U.S. economy, and the market will be watching both the activity number and the current and the prices component. So if services stay hot, that can make the Fed more cautious. If services activity weakens too much, then the market might start worrying about more growth. So you really don't want an extreme outlier on either end, or you might have a hard time making sense of it in the markets. And then Thursday brings the jobless claims, productivity, and unit labor costs. And that matters because productivity and labor costs feed directly into the inflation and margin story. And then Friday, of course, the big one, May jobs report after today's JOLTS data. Everybody's going to be watching Friday for the real test. If payrolls are hot or too hot, specifically, rates can push back against growth stocks. And if payrolls are too weak, the market might start worrying about the economy. And so the sweet spot is still soft enough for cuts, but not so soft that it screams recession, in my opinion. And then on the political macro side, I could probably get rid of some of this. Although, I was going to show you guys the sectors when I did it. Again, let me know if you like this format or if you'd like me to change up the format at all. Maybe it's easier if I just go through sectors right off the top and then go single names. Please leave a comment. I really appreciate it. You guys have been guiding the making of these videos. Like I said, I am a quantamental trader. So I do a lot of data analytics and coding to trade in a quantitative fashion, and the quantamental, so I'm mixing it with fundamentals, a pinch of discretion. So making these videos, I would love to know what part of what I can bring to the assessment of the markets that you'd like to see more of. Again, not financial advice, just how I see the markets. What part of that would you like to see more of? And so, this was the sectors for the day, but I can close that all now and we can get back into the macro that I'm watching. And so, Friday, very important, but the whole week really is. And then on the corporate side, I am watching AI infrastructure earnings and guidance, especially AVGO. I think they're reporting tomorrow. Is that correct? Yes. So that's going to be a big one, particularly around their guidance. Okay, so yeah, in closing, my takeaway today is pretty simple. Yesterday was software euphoria. Today's rotation. The market's still holding up, but the big winners are changing. And also that there's a lot of froth still in the market. When I don't see SPY raging when everybody else is raging, I start to think about although we did have some aftermarket moves here, but probably not enough. I'm looking on a different screen for the after hours move, and it's not as exaggerated, except Meta is starting to come back a little bit, and ServiceNow is starting to come back a little bit, but we'll see in the morning. Yeah, so it was market rotation for sure, but it wasn't a give up on the software trade for me, and the space trade is still nuanced. And then for the rest of the week, watch the data. It's going to tell us whether the market can keep leaning into AI infrastructure and risk assets, or whether rates and labor data start pushing back. And I'm sorry I reiterated that so much, but I think it's really important when you watch these market recaps to develop an idea as to what it means macro-wise, and not just say these names are hot and momentum trade everything, because that's certainly not what I'm about, and that's not what I'd like to bring to this channel. And so I'm going to be watching tomorrow whether the software's trade stabilizes, particularly whether Meta can reclaim strength, whether some of these moves like SPCE keep unwinding. Sometimes it's not even to trade them, just to make sure that my thesis is correct. But things like Hood and Uber and some of the things I mentioned yesterday in my portfolio are obviously things I'm going to be watching. And of course, how NVIDIA reacts versus SOX, I'll be watching. But please leave a comment below if you'd like to see individual tickers, if you like the format of this, if you have any recommendations for the format that you'd like better, let me know. And thanks for supporting the channel. I really appreciate it. Been getting some great feedback, some great messages. So thanks a lot, everybody. Happy trading, be safe, and yeah, have a great evening.